Managing your money as a US citizen can feel like navigating a complex maze, but today, we're breaking it down into the ultimate actionable masterclass. In an economy that's constantly shifting, mastering your personal finances isn't just a skill, it's the foundation of your future freedom and security. Over the next 8 minutes, we'll cover everything from basic budgeting and debt strategies to retirement accounts and long-term wealth building. Before we dive in, if you're serious about your financial health, hit that subscribe button and ring the bell to join our community of savvy investors. Section 1. The Foundation. We begin with the 50-30-20 rule, the gold standard for balancing your life today with your goals for tomorrow. 50% of your take-home pay should be dedicated to your needs: housing, groceries, transportation, and those unavoidable monthly utilities. 30% covers your wants. This is your lifestyle fund for dining out, travel, and the hobbies that keep you inspired and recharged. The final 20% is the most critical. It's for your future. This goes towards savings, investments, and paying down your high-interest debt. But we must account for inflation. Cash loses value over time, which is why your budget must eventually lead to productive investments. Inflation averages around 2 to 3% annually. If your money isn't growing faster than that, you're technically losing wealth every year. Before you tackle inflation or the market, you need a safety net. An emergency fund is what prevents a minor setback from becoming a crisis. Financial experts recommend keeping 3 to 6 months of essential expenses in a liquid account to cover unexpected job loss or repairs. Store this in a high-yield savings account. It stays accessible, but it's separate from your spending money and earns a much better rate than a standard account. Section 2. Choosing your institution. Where you keep your money matters as much as how much you save. There are 3 main options. Credit unions are member-owned and often offer lower loan rates and better personalized service than the giant national banks. Online banks have lower overhead, allowing them to pass on savings to you through higher interest rates on your savings and lower fees. Section 3. Managing debt. Debt is a powerful tool, but if mismanaged, it's a weight. There are 2 primary ways to tackle it effectively. The debt snowball focuses on paying off your smallest balances first. This provides quick wins that build the momentum you need to stay the course. The debt avalanche is mathematically superior. You pay off the highest interest balances first, which minimizes the total interest you pay over time. Your credit score dictates your borrowing power. Understanding what moves it is essential for major milestones like buying a home. Payment history is the single largest factor. Following closely is credit utilization. Aim to use less than 30% of your available limit. Section 4. Retirement. If your employer offers a 401k, the first rule of money management is to never leave free money on the table. Always contribute enough to get your employer's full match. It's an immediate, guaranteed 100% return on your investment, unbeatable anywhere else. Beyond your workplace plan, individual retirement accounts offer more flexibility and significant tax advantages for U.S. citizens. With a Roth IRA, you pay taxes on the way in, but your money grows tax-free and your withdrawals in retirement are also completely tax-free. A traditional IRA may give you an upfront tax deduction, lowering your taxable income today, though you'll pay taxes on withdrawals later. Don't overlook the health savings account. It's the only account with a triple tax advantage: tax-free contributions, growth, and withdrawals for health costs. To qualify, you need a high-deductible health plan. If you have one, an HSA is arguably the most powerful wealth-building tool in the U.S. Section 5. Wealth creation. To outpace inflation, you must invest. For most people, simplicity is more effective than chasing the next hot stock. Broad market index funds allow you to own a piece of thousands of companies at a very low cost with built-in diversification to manage risk. The secret sauce of investing isn't picking the perfect stock, it's time. Consistent small investments over decades create life-changing wealth. If you have children, the 5 on 29 plan is your go-to tool. It's a tax-advantaged account specifically designed to encourage saving for future education costs. Earnings in a 529 grow tax-free, and withdrawals are tax-free when used for qualified education expenses, from tuition to books. Managing money also means protecting it. Insurance is an essential part of any comprehensive financial plan for a U.S. household. Ensure you have adequate coverage for your home, auto, life, and disability. Proper insurance ensures one bad day doesn't wipe out years of progress. Section 6. Legacy. Estate planning isn't just for the wealthy. It's about ensuring your wishes are followed and your loved ones are protected. Start with a basic will and verify that your beneficiaries are correct on all your financial accounts and insurance policies to avoid probate. But all the tools in the world won't help without the right mindset. Understanding your relationship with money is the final piece of the puzzle. Beware of lifestyle creep, the tendency to spend more as you earn more. Keeping your expenses stable as your income grows is the fast track to wealth. Finally, let's talk tax efficiency. It's not just about how much you make, it's about how much you actually keep after taxes are settled. Take full advantage of standard deductions and explore credits for education, home energy, or childcare to legally minimize your tax bill. Before our final recap, remember that not all financial institutions are created equal. You must be a discerning, informed consumer. Always compare fees, interest rates on both loans and savings, the ease of their digital tools, and their overall reputation for customer service. Let's recap your master plan. Step 1. Establish your 50-30-20 budget. Step 2. Build that 3 to 6 month Fortress emergency fund. Step 3. Aggressively eliminate high-interest debt. Step 4. Maximize your workplace 401k match and leverage an IRA or HSA. Step 5. Invest simply in broad index funds for the long term. Step 6. Review your insurance and tax strategy at least once a year. Money management isn't a one-time event, it's a lifelong habit of discipline. The small steps you take today will compound into a life of freedom. What's the one financial goal you're going to tackle first after watching this? Let me know in the comments. I love reading your stories. Thanks for watching. For more guides on building wealth and living your best financial life, click the next video on your screen right now.